Hi there, this is Vinney Chopra. I wanted to talk in this module about tax advantages. It's so interesting that lots of our advantages are for real estate in our country, USA, and maybe in other countries too. The key thing is that there is so much can be done in the real estate where there is land and then we have a structure. That's the buildings and apartment buildings or office buildings or any kind of buildings, hotels, all that. But the buildings depreciate. So what happens is the federal law tells us that we have for residential 27.5 years for us to depreciate that structured value of the property can be depreciated in straight line, or we could depreciate it accelerated depreciation, we call it, because some parts of the building like the kitchen, the wiring, the knobs, the flooring, the cabinets, all different parts of the apartment complex or multifamily, we could depreciate on 5-year schedule X amount of dollars and 10-year schedule X amount of dollars, and then the leftover 27.5 years. So that's what is so important, because what we do is with the tax ramifications, we are able to give in that LLC when the investor puts the money in, and when we are running the whole operation of the property at the end of the year, even though the investors have gotten their cash flows for the whole year, but guess what? Because of the accelerated depreciations and other expenses and so forth, the property might show a paper loss, because depreciation is a paper loss also. So in your K1, you could tell the investors, in your K1, you will be actually even making a lot of cash flows distributions, but the effect on your taxes will be so minimum. You may not even have to pay any taxes on those distributions. But you have to ask them, you're not an attorney or a CPA, make that disclaimer right there and tell them, please talk to your CPA and attorney and things like financial planner. But I just want to kind of explain that because it's a great advantage to really put your money into the real estate. That's the taxation part. The other is the 1031 exchanges. Even the syndications don't allow. I don't allow that much either. For people to really take their gains and then reinvest and so that they don't have to pay the taxes and so forth, the gain taxes. But the key thing is 1031 is very common, and the other one is the IRAs and the 401ks and the self-directed IRAs, where they can actually put their retirement money and then invest into the deals, into the real estate, and they can defer the taxes also. So there are lots of tax advantages, and the pay downs also, because when we are able to buy the property and the rental income is paying the mortgage, is paying the interest and the principal also. So paying down of that gives also better advantages to the investors also.